Welcome to the rectangle continuation pattern tutorial. Now this pattern is a little underrated gem of a pattern, and we've done very well over the years in trading these when we see them on stock market charts. Now you know what, it's true what they tell you when you first get involved in shares, that nothing goes up in a straight line. However, this pattern is the next best thing to something going up in a straight line, because what you'll often find is the share price will go up. You'll put in a little rectangle pattern and then it will continue ascending upwards. These also do appear in downtrends. So if a share is going down in price, you'll put in a little rectangle pattern and then it will continue going downwards. One good thing about this pattern is there's a very easy way of knowing how high or how low it will send the shares. We have this technique on our ebook for this series. So if you want to know how to trade this pattern properly and how high it will send the shares or how low it will send the shares, then we do strongly recommend that you download the ebook if you haven't done already. Right now we need to show you what a rectangle pattern looks like. This is the rectangle formation. What you'll typically find is it will be an area of sideways consolidation after an uptrend in this example, but it does actually happen in downtrends as well. The market pretty much obeys the buy and sell line, so it stays above the buy line and under the sell line. You do anticipate that the sell line will get violated and the trend will assume upwards. The thing with rectangular patterns is they're often missed and overlooked by traders. And the reason for that is probably because if you look at a stock market chart and you see a big head and shoulders, that jumps out at you. But you only need a couple of days consolidation to form one of these rectangular patterns, and that is often missed because traders are looking for other things and bigger patterns. We showed you on our ebook how to work out how high a rectangular pattern should send the shares. Once you get to that price, it negates the pattern, and that works for not just this pattern, it works for head and shoulders and everything else. But in this example, if you have a rectangle pattern, you've worked out how high the shares should go. Once it gets to that price, it negates the pattern. Forget about the rectangle pattern because it's had its effect. You should then be looking at other patterns to see what's going to happen next with the share price. And as we said, that goes for any pattern. As well, in an uptrend, when you get a continuation rectangle pattern, a close above the pattern will mean it's completed and it will give you your buy signal. The next pattern that you'll be learning is something called the 2-day rule, and it is an absolute cracker. It is a brilliant and very clever pattern, and that is the next thing that you guys need to be watching.